To build anything that truly lasts, it takes time.
So you just look at this deal in isolation, why Vietnam is important and what it means for US. This is the first large deal which in a sense has progressed very smoothly, and this is much lower. The tariffs which are at play are much lower than what initially the sanction were, which means that it is evident that before the 9th of July deadline, lot of trade deals would be stuck. Some are yes, some are no. But a lot of I don't know stuff, hopefully before 9th of July, from a market standpoint, will get addressed. So delay of this or extension of the 9th July deadline from a market standpoint, that in a sense gets arrested. If tariffs are implemented, then the macroeconomists would say that, okay, this is going to be much more dilutive for the US economy. If it is much more dilutive for the US economy, that means the total tariff collections for US will go down, which means on the fiscal side or on the debt side, the dollar is going to weaken further. So there you go. Dollar already has gone below 97 yesterday, and the trend continues. That's trend number 2. Trend number 3 is equities. Why should equities do well? Well, I also expect that the tariff interplay is not at play. That means interest rates will come down soon, and then if interest rates are down, yields will remain lower. If yields are lower, it automatically will have impact in the way how the global equity markets would move. So risk is making a comeback. US economy, make America great, the whole pitch of Donald Trump, that is getting challenged. So there is a narrative change and there is a positioning change. The positioning in the month of Jan was US will come back, tariffs will be high, the damage will be huge for equity markets, and dollar will strengthen. Sab ulta pulta ho gaya. You just think about it.
Pretty much in typical Donald Trump style, he says that Vietnam will be paying the United States a 20% tariff on any good, on any and all goods sent into our territory, and a 40% tariff on any transshipping in return. Vietnam will do something that they have never done before, give the United States of America total access to their markets for trade. In other words, they will be opening their market to the United States. So that's the commentary coming in from Donald Trump. Having said that, you are seeing a whole lot of Vietnamese, and like I mentioned, for the US equity markets as well, it was a decent close overnight. Today, of course, is going to be a half day, and then tomorrow is going to be a trading holiday for the US market. So right now, it's important to take cognizance of what the US futures are doing. Pretty much nothing. They're pretty quiet in trade right now. But it's important to mark what the rest of the globe is also up to, because you're not really seeing much enthusiasm, at least across the Asian screen. It's flat for Japan right now. Hong Kong is down about 270 points, and Shanghai as well is marginally soft as we speak. What about the GIFT Nifty? The implied open will just come up for you on your screens, because that is also indicating a little bit of a quiet side. 25,587 is where we're currently standing. And for our markets as well, you know, one didn't see that coming. Although it was just a minuscule profit taking, we're pretty much at elevated levels and around those all-time highs. But the fact that we actually slid, and the way we slid actually, we were down almost 1% at one point in time at the session lows.
Yeah, the price action last couple of days is not inspiring. And you really look at in terms of the Nifty or purely in terms of the tone and tonality of the broader market, it's not inspiring a lot of confidence, and it is not inspiring that there is urgency or there should be some fall of buying. So the market which closed that huge technical wall of 25,200 was supposed to move into auto mode, and that auto mode or the thunder which was supposed to be there, that has not happened. So on that front, I think you need to reassess the strength of the Nifty. Then the breadth of the market of late has been pretty puffy-duffy. There are no concerns in the market about reversal per se, but there is nothing which in a sense will also smartly push the market higher. The high frequency data, GST poor, auto dispatch numbers, nothing expiring, bank credit growth, whatever is coming, at least, from names like Mahindra Finance and other banks, they are not again indicating that, okay, credit growth is making a comeback. So markets are telling you that we are going up because of global cues, not because we expect excitement in the market or excitement in the world because of local cues. So it's a bit of a local versus global. There are flows, there is global strength, and very little global push, which in a sense will take Indian markets higher. You came back in the month of May and April because crude came down, yields came down, FI stopped selling, IPOs had dried up. All that now, in a sense, was the tailwind, and that tailwind I think has already played itself out. That's my sense.
Okay, and on that note, let's take it across to Srishti as well and find out what the global commentary has been overnight.